7 minutes in, and I hit the unpause button. So we're good. All right. Yes, presentation. You already heard everything, so I'm going to rifle through these screens so that you know at least what you missed in the last 7 minutes. All right. And you got to see the bunny because that's super important. This is what I want to show you. All right. This is the sequence. So we just talked about this, so you audibly heard me talk about it. And this is a visual representation. So now that you can see it, it should be a lot easier to understand. This is how we derive the ratios. So this is what I want to make sure everybody is at least on the same page as me. So when we talk about the sequence and we talk about getting the 236, the 382, and the 618 from the sequence, we're talking about dividing, right, numbers within the sequence with each other. We're talking about starting at one position, any position, and move 3 positions to the right, and you divide it, just like this example here. That'll get you to 236 every time. Same with the 382 and the 618. So there's a relationship with the ratios within the sequence. That, as traders, is what we use. All right. So I hope everybody's with me on that. Now, to get the 786 and the 886, we end up taking the square root of the 0.618. We get the 786, and the square root of 0.786, we get the 886. So now that you understand where those numbers come from, we can move on. I want to get the record straight about the 5. And now I call it the 5. It's the 0.50 or the 50%. I call it the 5. You can call it whatever makes you feel good at the end of the day. It is not part of the Fibonacci ratios. End of story. There's no debate in this period. All right? And now that that's clear, we can use it as traders because 50% has a historical relationship with price action. And to add it into the Fibonacci retracement tool only makes sense so that we can have all of our tools in the same spot at the same time and look at those different support and resistance lines that we're looking at. All right. Now, before we go right into the retracements, understand, like I said, how big Fibonacci is. It is not just a retracement tool. There's Fibonacci fans, there's Fibonacci time zones, circles, spirals, wedges, arcs, channels. These are all based off of that same sequence and those same ratios that we just spoke about. I really want to drive home how important that is, that it's far bigger than just trading. So we are incorporating it into our trading, all right? It is also part of Elliott wave studies, advanced ABCD Gartley patterns, crab patterns, butterfly patterns, bat patterns, the whole 9 yards. You use Fibonacci in tandem with these theories or these methods of trading. Now, to fully understand and to fully appreciate Fibonacci retracements, you do need some fundamental understanding of 2 things: supply and demand and support resistance. All right, can't stress how important that is. So we're going to take a few minutes and we're going to talk about those things. As far as supply and demand is considered, it's exactly the way you're thinking it. There is an abundance of a supply of whatever it may be, potato chips. It doesn't make any difference. If there's so many of them that the sellers are having trouble selling them for that price that they're at, they're going to have to discount them. And by discounting them, they're going to have to bring their price, their asking price, down because there's just not enough buyers. Nobody's interested. However, if those same potato chips came across during a football tailgate and all the other food in the world was gone, well, then you could charge a premium for it because now the demand is up. The demand is way up and the supply is way down. So understanding the relationship. Now that's a 1-minute spiel on supply and demand. I could talk about this for days. All right. So, throw it in the comments if you're a little stuck on that. But the very, very, very basics of supply and demand is just that. Price is an agreement. Price is what the sellers are willing to sell whatever product they have at and what the buyers are willing to buy that product for. When you see areas of accumulation or consolidation, they're at an equilibrium. The buyers and the sellers are sort of happy where they're at. There's no drastic push for the price to go up, and there's no drastic push for the price to go down. So therefore, you have this balance, this equilibrium. And you can see that in the charts. When you look at Bollinger Bands, you can see they're out of equilibrium. And then you have the squeeze when they're back in equilibrium. So that's market dynamics. It's market price dynamics. It's a very simple explanation for what it is. And the supply and demand is easy. There you go. All right, Ricky. We're moving on, everybody. I do want to go back 1 second. I'm sorry. There are two different categories, right? There's an infinite supply of something and a finite supply of something. Bitcoin is a finite supply. There is and only will ever be, hopefully by the year 2140, 21 million and change Bitcoin, never anymore ever. All right? So that is a finite supply. It has a limit, whereas potato chips, you can always make more potato chips. Okay. The other half of Fibonacci retracement, what it really helps with people is support and resistance. All right, we're looking for potential areas of interest based off of price action, based off of what we see through the ratios, and we're talking about support and resistance. We're talking about seeing a reaction. We want to see a bounce. We want to see buying when there's been nothing but selling. We want to see selling when there's been nothing but buying, vice versa, all the way. So the basics of support and resistance can be broken down from many, many, many different sources. Historical price action, as you can see on this chart here. This swing high ended up being a level of resistance, just as this swing low ended up being a level of support, which in turn turned into resistance. Okay? Trend lines. This line down here, you can see it was resistance. It was resistance. Price under the trend line is going to act as resistance. Price above the trend line will act as support. EMAs, SMAs, any moving averages, right? These are all part of support and resistance. Patterns. If you're looking at symmetrical triangles, then you'll have an area of support down below and an area of resistance up above while you're crushing that price within that pattern. Swing highs, swing lows, and Fibonacci retracement. So finally, I know, I'm sorry, but I did want to get those core things out of the way. The Fibonacci retracement. Here it is in all of its glory. This represents price within a range, all right, from 0 to 100. And what I mean by that is if we were to take any trend, any price, well, I have this example up here right now, so we're going to go with it. If we take, for instance, this big move right here, this big giant move, and we want to say that the bottom, right, is going to be our 0 line, and the top is going to be our 100%. We want to know what happened here. In fact, what we're more curious about is this candle here and how far has it retraced. See the name Fibonacci retracement? We want to know that we had this big move up, but what did we lose? What did we lose from the top? And this is key. And this is how we're going to use Fibonacci. Right? So we're going to pull this Fibonacci down. If you're on TradingView, it'll be the third box on the left-hand side. You can press and hold it, and it'll give you a list of items. And you'll notice a lot of these are all fibs. If it says fib, it's Fibonacci. So Fibonacci retracement is what we want. And we're going to take the swing low. We're going to take the lowest point in this particular trend, which I know is not a trend, but just for what we're measuring out here. Now, with the magnet tool on, yes, you would absolutely try to snap it to your candle, and there is a huge debate when it comes to wicks or bodies. All right, that is there's no correct answer. All right, as a trader, What I do when it comes to wicks, I break it down into actual trading, or I look for breakouts, or like a fake out, you know, some type of a stock hunt. So if it doesn't look like real trading, or if it looks like a fat finger, or if it looks like only a couple people went in there and they bought it real quick, or they sold it real quick, then I might not call that real trading. But I'll dive, this is a daily, so I could dive that down to a 4-hour chart. And if there was real trading going on there, then I'm going to count it. For this particular move, because I'm looking for the peak, then I want the whole thing. I want the peak. I want to know where people were selling all the way up to in the last purchase. So with the retracement tool on, I've snapped it over here, but what I'm going to do, I'm just going to drag it out so you can see it easier. And this shows me, this is my 1. I called it 0 before, but forgive me. This is my 1. This is my 0, but this represents 100%. This is what we're doing, 100%. All right. And now when we go down, you recognize these numbers? These were all the ratios that we got earlier. 236, what this tells you is when price hits the 236, it lost 23.6% from this high. When it's down to the 382, it has lost 38.2% from this price. All right. The 5, the 618, 786. Now, some people do use an 886. I encourage you to explore that in your trading. Look through them. I have found them useful. It is not on this for this example because I want to show you a default layout. That's my puppy, and she says hi. So I want to show you the default layout so that you're not confused. Once I start throwing up custom colors and you say, well, you know, my colors were teal and green and purple and brown, it's fine. I'm going to keep it very easy. All right. So that's a quick example. I wanted to show you that as we get into it. So the zone, this is what we gravitate towards, especially during pullbacks. We gravitate towards the 382, between the 382 and the 618. All right. In crypto, there happens to be larger retracements where the 618 to the 786 ends up becoming a viable buying opportunity zone on a pullback. But it's an aggressive target. So I want you to understand that you can have conservative targets at the 382, and you can have aggressive targets at the 786. The issue being, if you bought from the 382 and it retraced to the 786, now you've layered in buys from the 382, the 5, the 618, and the 786. And if you don't get that bounce and it ends up tanking and hits your stop, well, you just layered in 4 big trades and ended up getting stopped out. So that's consideration that needs to be taken. But look at this example real quick. This was a Waves BTC daily chart on Binance. This was last night or the night before. But look at the trend. This is what we're measuring here. This is where we laid our retracement. Look at how nice it is. It tapped the 618 and came down and found support at the 786. Then it blasted through to 618 and said, forget it, I don't even need you, I was already there. And ended up coming up, making a new higher high, and now sitting at the 5. 5, it looks like it consolidated for a few days, pushed up through the 382, pushed up through the 236, and then this is our 1. So even though this is how we drew it, this price was already here before we laid it out. But look how well those lines ended up becoming. What's important to remember when you're laying out Fibonacci retracement, if you're laying from the bottom to the top, a swing low to a swing high, you're measuring the down move. This is what you're looking at. All right. So you use price action to the left to measure what's going to happen in the right. Same thing the other way around. If you go top, let's say we went top to bottom, right? What you're looking for is the resistance levels you may hit getting back to that top. All right. So I hope that makes sense. Set up, optimize, draw correctly. This is what you're going to see when you open up TradingView and you open up your Fibonacci retracement tool. So instead of talking about the slide, let's just do it. So we're back over here at our happy example, and we're going to go, and we're just going to open this up, and we're going to say, here we go. This is what we're looking at. Now, you see all the options. Don't get confused. It's fine. Stick with default for now. If you're brand new to Fibs, stick with the default for now. Add them as you need and remove them as you don't need. Okay? You could very easily change these all to one color. Let's say I only want to look at yellow. Now everything's yellow. It looks crazy, so let's just tone that down with some blue. That's fine. If you want to go back to default, no problem. You can go apply default, and you're back to default. If you want the background or you don't want the background, these are all totally personal preferences, and this is 100% you, your chart, and how you want it to look, all right? Important to remember for later, we're going to be talking about the 1618, the 2618, the 3618, the 423. These are on here by default. There's nothing more you need to do. They're right there. If you did want to add the 886, then you come over to any one of these unchecked boxes, double click it, point 886, click away, and now it's on. Click the button, and now it's in. Okay, so it's very simple to do. I don't want to spend too much time on this. By optimizing it, we're talking about getting it to your exact template. If you're looking for just profit targets, you may not need the 236, 382, the 5, the 618, the 786. You can pull all those off and simply just throw your extensions on, your 1618s up to your 423s, so on and so forth. Save them as a template and then go get it. I use a ton of templates. For me, that's very easy. So when I draw a cup and handle, I know exactly what I'm looking for. I can lay the cup and handle template on there, and I'm good. I'm not bothered by any other noise. I don't need any more lines on the chart. All right. So that is what it looks like when you pull it out of the box and you take the wrapping paper off. Let's see. Yes, move. Yes, 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 yes. We should all be good on that. The extensions that we just mentioned, 1272 and 1414. That's profit targets. It's also can be used for Gartley patterns, advanced ABCD patterns, but they are also conservative targets. So if, let's say, an aggressive target was a 1618 and maybe I wanted to get out of that trade earlier, I might set up some profit taking at the 1414, maybe the 127. So that's just something for you to consider. But these are numbers that you may see all the way up to a 1273, 8.23. Big stuff, big stuff. Now, a word about trends. Typically, Fibonacci seems to work best when the market is trending. And for that, you may see a large channel where price action is working its way down, but it's coming up and going down, coming up and going down, but it's within a parallel channel. You can set your Fibonacci retracement to get an idea for the levels of support and resistance you're going to see on the way down. So you can use that to your advantage to help you make better decisions while making those trades, or staying away from those trades altogether if you don't like how it's reacting, price action. It's extremely effective when a trend has come out of consolidation after a breakout. We saw this with I believe it was hot. Yeah, I think it was hot BTC. And yes, so this is a good example here. Let's get rid of all that junk. But this was an area of massive consolidation, right? This is actually a great example. So we're going to leave this on the chart for a second. This is a huge area of accumulation. This is a daily chart. I think when I measured it out before, it was 54 days, 55 days, give or take. And when looking at this, we were looking at this big move here. And with that big move, we wanted the retracement. The retracement was an area of interest for us. So I'm going to go here. Let me get rid of all that junk. and let me grab the retracement tool. All right, so now that I have it, I got it. Now you should all be either with me on this, right? You can pull that chart up right now, put it in a daily. It's hot BTC finance, and grab your Fibonacci extension tool. Go ahead and throw it on defaults so that we are all 100% on the same page. And you're looking for a low and a high, either for a trend or for a move. In this particular instance, we're going to pretend that none of this ever happened, and we're looking at this move. Something like the trading room tool, right, would have showed us this. And this is one of the things that makes it so powerful. That is why I was on the GRSBTC before the webinar started, because I saw the peak in the 3-day period, and we retraced down 63%. So I knew we were floating around the 618, and I said, I got to pull that chart up because I'm starting to see trend is working its way up into the longer time frames, and these are going sideways, bearish. They may be working their way out. So we could be looking for a full flip here into bullish territory. Not to get off subject, let's go back to the chart, and we're going to take our retracement tool, and we're going to go from the bottom to the top of the move. Now, I pull mine out like this. You can just simply extend the lines within the settings. So if you go to settings and you go to extend lines, you won't have to do that. So now I can just put that back over there and everybody's happy. So what I'm looking at, what you're looking at as a trader, what we're all looking at, because we're discussing Fibonacci retracement, is the hot zone, right? We're looking at that 382 to 618. We're looking at this. This is what makes everyone happy, this zone, when we're talking about large moves up and then the drawback. So this high, this low gave us our Fibonacci retracement tool. It gave out the layout. And automatically, like magic, the 236, 382, the 5, the 618, 786 were all charted for us. They were all plotted for us as potential support resistance zones, which we in turn use them as entries, exits, and profit targets. And so now we're, now we're getting into that moment where that's fantastic. Show me more. All right, so we saw this. So we broke out our tool and said, okay, it's starting to retrace, right? If I was an aggressive trader, I would say, well, I'm going to wait for it to hit the 618. Now, mind you, we saw this move. It came on the 3rd day, all right? So we're going to call this move breaking up for a new high. We broke out of this area of accumulation. We had this big move here, and then it started coming down. So right here, we know, all right, this high is probably set. Now we're looking for a pullback. It's already pulling back. So now at this point, I could say, well, I could get in at the 5, but trading already happened there. I could put an order in at the 618. I could throw an order around the 786 if I'm very aggressive. Put the order in at the 618 and you hit it. Great. Trading comes up and you have what looks like almost the same thing. Another peak move up with another retracement. So without going crazy about it, let's just measure that move from isolated from the trend. Okay, so now this is, like I just said, Fibonacci within trend. So now we're trending. Right? We have a low, we have a high, and then we have a higher low. We just made a higher high. So now we're in trend. It's a local trend, but it's still a trend nonetheless. So we have our low, we have our high, and look at that. Didn't quite hit the 618, but man, we are right there. So as traders, personally, I front run. By front run, I mean, if everybody's looking at 19, this is actually a terrible example because the sats are so low. But work with me here. If everybody's looking at 19, then I'm looking at 20, or I'm looking at 19.5. I'm trying to get my order filled before everybody else. While everybody's waiting to get filled, I'm looking to sacrifice a little percentage, a little gain, so that I am filled. And in this situation, that would have worked out great because I would have been filled while these guys down here on the 618 would not have gotten filled. All right, that also goes for profit targets. I front run my profit targets, I front run my entries, and stop losses are situational at best. So, but we could see, do you see how this works? You see how we took a low, we took a high, and there was a pullback right into the zone. I mean, you can't make this stuff up. It's not magic, but it's pretty uncanny that it does work a lot more than it doesn't. Now in this situation, right, we got our targets filled and we said, okay, great. Now you would need profit targets. We're going to talk about that in just 1 second. But let's look at the next example. Here's another high, right? And we'll take the low from that move. Okay? Now look, I'm not making the chart up. This chart exists. It should be on your screen. You could do the same thing. Here's the low from the pullback. Right? Here's the high. We started to lose. Right? We're losing percentages. So we throw our retracement tool up. Right? And what happens? We come down to the 382. Okay? Trading came down to the 382 on the next candle. More than likely, we hit the lows before we hit the next high. All right? We would know that for sure if we take a look at a 4-hour chart or 1-hour chart. We broke down that candle. Chances are it went lower. So if you were at the 5, you wouldn't have gone hit unless you front ran it. If you were, very conservative, you would have hit the 382. You would have gotten your order filled. All right, but this is what we're talking about. This is a fantastic way to use that tool. Fantastic way to use that tool. All right, so like a pro, actually, we just explained all this. So like a pro, the ABC, the A is the big move. The big move. All right? The B, the pullback. This is ideal. This, as a trader, this gives you the warm and fuzzies right here. You get that pullback right to a target of a 5, a 618, and your order's filled, and you're ready to start making some gains. All right, and then you have the extension. Now we're going to talk about the extension we'll talk about that right now. So as far as extensions are concerned, now we had the example here. We'll just stay on this chart. It's fine. This was our retracement right here. All right. And let's say we tag that order at the 618. So if you flip, you see how the 618 is down here? You see that? 1 618, 2 618, 3 618, 4 2 3. If you want them above you and you want to measure the reverse, just flip these puppies around. Bang, bang, just like that. All right. So wait a second. I did that all wrong. Here we go. My bad. Perfect. You want to use the same markings, right? You just want to flip it upside down. What this will give you is targets for this move. That retracement pullback. Now you know you pull back around a 618, right? This was your high, and this is your pullback. Now you're looking for profit targets back up. So conservative targets. So back to the 1, which is a full retracement back, right? So I said from the low to the high, you lost 61.8%. You lost 61%. You got your order filled. Well, you want to get that back, right? That's your big target here. Your next target could be a 1618. You can see in this particular example, it hit. So you got the 1618. Your second target, 2618. And you can see in this example, 2618 was hit. Next target, 3618. 3618 was hit. 423. 423 was hit. This is a trader's dream. You catch this guy right here. You lay down that retracement, right? And it follows this similar pattern. Now remember, this is what makes it beautiful. It's coming out of this accumulation zone with this big spike. Volume came up. You know, all of a sudden everybody's talking about hot, hot, hot. Everybody wants hot. And you said, well, I'm not buying up here. It's coming back. And when it does, I'll be patient and I'll get my order filled, and then I'll set up some profit targets. And that's what you did. The really aggressive guys will come over here with a 4-2-3, and they'll set it and forget it. So that's my target. See you later. I'm done. All right. I like to pull profits. So I take profits along the way, 10% here, 10% here, 10% here, let the rest ride, that type of thing. But you trade how you trade, whatever your trading style is, that's what's going to dictate how you trade. But this is a perfect textbook example of how you could have traded this breakout from accumulation using the Fibonacci retracement, using it for the ABC, using it for the big move, the pullback, right, and the extension. Gets you into these zones here where you can comfortably set these target zones. Now, I want to show you something while we're on this screen and while we're looking at just this right here. I want to point a few things out, and I'm going to do this to do it. I'm going to use a big old arrow. All right? This guy right here, that was your first move. This was your first move with a pullback, right? We'll call that, whatever. We'll call that move one. Doesn't matter what you call it. Now we're going to take another one here. This is another move. All right, this is another big move up with a pullback. Okay, we can see that. Everybody sees that. Now we got this. We got another big move and another big pullback. Okay, so now we're at 1, 2, 3 moves. Right now we have another big move and another big pullback. All right, but what happened on this move? We didn't get that big. We didn't get that next higher high. Okay. What I do want to demonstrate to you, if you're going to set those high 3, 6, 1, 8, 4, 2, 3s, if you're going to set those types of targets, please remember the more of these moves you see, move 1, move 2, move 3, move 4, the more of those you see prior to your current move that you want to trade, the aggressiveness of your targets should come down, if that makes sense. So let's just say, for example, anything. I'm just showing this on screen. So let's just take a look at this. But if I'm into my moves and I got 3 prior moves, right? I don't want to be shooting for the 2, 6, 1, 8 of that current move. That it's too much, right? So if I'm putting this, I'm putting that on my chart based off of one move. Let's get rid of all these because we like to keep a somewhat clean chart here. So I'm just going to play this move right here. I came in late. I didn't see all these. I said, oh, man, I totally missed the move. But I got triggered on this guy. I was like, ooh, that was a nice move. So I come over here and I say, all right, I got this big move, right? This big giant move's cool. Hey, look at that. It came down just about to the 5. I front ran it. That's awesome. Let's do this. So now I'm going to flip this puppy around just like this. Say, okay, now I got my profit targets. I'm 3 moves in. I'm not going for the 4, 2, 3. I'm not going for the 3, 6, 1, 8. I'm lucky if I'm going for the 1, 6, 1, 8. At this point, I'm happy to get the 1. Right? And I can let a couple others ride. Now, I would have lost the 2, 6, 1, 8 and the 1, 6, 1, 8. That would have been a profitable trade. But as you have more moves in front of you, I start taking less and less aggressive targets. All right, so that's a personal thing. If you guys do the same thing and it works for you, great. If you're like Chingas, you're a madman. You could have gotten the 2, 6, 1, 8. You left money on the table. All right, I left your money on the table, so now you got more money. You should be thanking me. All right, let's get back. Like a pro. Using fibs with time frames. Okay, so if you're an intraday trader, you trade the 1-hour chart, you trade the you trade a 78-minute chart, whatever the case may be. You could pull retracements from a higher time frame. Right? So you could pull retracements from a 4-hour chart or a 6-hour chart, and you can use those back on the 1-hour chart for potential areas of support and resistance. Different areas for entries and exits and profit targets. It's the same deal. It's just that instead of just plotting it out on a well, we're on a 1 day chart. So let's just say we trade the 1 day. For this, it would be a week. So I could go to the 1 week chart and I would say, all right, well, for this giant move we're looking at right here, I can lay down this fib right here, right? And now this is on a weekly chart, but I'm going to go back to the daily because, that's where I want to do my trading, right? You do 2, 3, 5, 7 day swing trades. You could do it on here. And if we look at this particular move, we can see support at the 382, resistance at the 236, right? Support broke at the 382. It's coming down to the 5, but hasn't quite hit it, although it did hit it right here. Hasn't quite hit it yet. And you're looking to flip the 382 from what was support to now resistance, which so far it's holding up. All right. So this chart, this daily time frame, this fib was pulled from a weekly. Now I would have gotten the same exact results on a daily. So don't get me wrong. So you're still candle to candle with the high and the low, but you can swing that. It'll be very different if you're pulling fibs from a daily and you're trading, a 1 hour chart. Those will line up a little bit differently, or you see a larger trend. Right. So that's something to be mindful of. Trading on a daily, pulling fibs from a weekly gives you additional areas of interest. A word on Confluence. This can't be stressed enough, like everything else that can't be stressed enough. Confluence, meaning you have other indications of why you're making that trade. Not trading solely off the fib unless it's a very specific trade system. Otherwise, you are looking for Confluence, and you get Confluence from MACD, stochastic, RSI, moving averages, previous price action, trend lines, support and resistance from supply and demand. All those things are Confluence. Even volume can give you, the Confluence can give you, say, this move looks like it's going to continue up. I'm happy with my retracements. I'm happy with my profit targets. I'm happy with my stop losses because volume is also indicating that there's interest here, or previous levels of support and resistance. This could have been a factor. This line right here, this previous high, could have been a factor on these trades over here. And when you look at that previous swing high is the 618 of the entire move. I mean, it's right there, within a sat or two. It's the same sat, actually, it's 24. So you'll notice that these things do start lining up and they do start making some uncanny sense. All right. It's important to understand the Fibonacci retracement tool is a tool. The Fibonacci retracement tool is a tool, and it is there to help you make trading decisions. All right. We're not solely using Fibonacci in order to make our trades, but we are using Fibonacci as a tool, just like we use our line tool to make trends. Just like we do anything on the chart with any type of either indicator or any type of measurement tool, box, a square, raise, whatever, it is a tool. All right. Can be used to make more precise entries and exits from trades, and it can be considered another tool for your tool set. Okay, so I put this slide up here because I feel like if you've learned anything about fibs, you've heard this before. So I wanted to address it. The self-fulfilling prophecy debate. Discuss, really debate. Here's my thoughts on this. All right. As traders for crypto, because we are a much smaller group of traders compared to Forex or traditionals or options, futures, whatever the case may be, there can be some truth to this if every trader knew how to use Fibonacci's. And if every trader agreed to use them body, wick, swing low, swing high, technical swing low, technical swing high, peak high, peak low, whatever. There's too many variations to go through. But if that were the case, then okay, there's some truth to the self-fulfilling prophecy. I like to get out of the realm of self-fulfilling prophecy and use it for what it is. It's a magnificent piece of science or math that is found in the universe, out in the world, and we are adapting it to a trading style. We're adapting it to us. You can choose to think whatever you like. All right. Advanced Fibonacci. So we did cover some of this before. I'm trying to take a look at the time. We're rolling into the Q&A zone. What we'll probably end up doing is getting some feedback from you guys and deciding if we need to take Fibonacci to the next step. I did show you extensions for stop losses. Again, you use the level underneath you, right? So if you're buying at the 618, you could take stop loss at the 786, so on and so forth. You can go down the list like that. And how to draw Fibonacci like a pro, that's switching it back in order to get your profit targets. It's very similar to using a Fibonacci extension tool. So that being said, let's get back to the crowd here. And now that's it for the presentation. That's it for the slideshow, right? So talk to me. What do you guys got as far as, do you understand Fibonacci retracement? Do you get the idea behind it? Like the not the theory behind it, but do you understand that you can use Fibonacci retracement not only for trading, but for potential areas of support and resistance? Please, if time, discuss the last point. Stop loss, what is good target? So let's throw a WAR, throw a pairing out there. Bitcoin, Litecoin, Ethereum, something hopefully with more volume or trading volume than hot BTC. And we'll throw the chart up and we'll take a look, all right? Is this just a tool below the Fib retracement tool in trading view? It says Fib retracement, right? So Fib retracement. It's the first Fib you're going to see when you go down to trading view on the left-hand side. You'll see this on the third one down, the first one that says Fib. Now, what I do is, here's a little trading view tip for you. What I do is I start it. I make it a favorite, and then I open my favorites down here on the bottom left, and then I have this. And this is what I use on most charts. All right, these are my squares, triangles, circles, and halves for patterns. This is my Fib extension. The trend line, okay, I don't need to go through each one, but this is just for easy access. You only got to go over here once, you start, and then boom, everything's down here or up top, wherever you want to put it is fine. WAR, LTC, yeah, whatever, sure. Let's stick with LTC BT. Well, let's do LTC USD. How about that? We'll go to Coinbase. They got probably enough data. All right, so we're on a daily chart. Let's go to a weekly chart because we want to just get an idea of overall trend, right? This is another good thing that we can do with the price scanner. So we can come over here and we could say Litecoin. So we're just going to pop this in. This will give you a very quick idea of what trend is looking at certain time frames. So I don't have to sit here and open up all those charts. So Litecoin, now this is a BTC pair. Strong trend on the 12 up. It looks like from 1 hour up is trending fairly well, with maybe a possible minor pullback either happening or just happened. Only up 3 in the last 3 days with a drawback of 52%. So, not super as far as something that we're looking to trade. But now we have an idea of all of those trends, and you can see the trend is coming up here. So, WAR, let's take a look. We're on a weekly chart. Right. So far, the obvious thing for me, right, would be that this is a low and this is a high. What we have here is some type of movement that we can all agree happened, right? There is some type of low here, and there's certainly a high. So let's measure this. Let's see what we got. Right, we're at 87%. This is an 87% increase. That's pretty good. So why don't we take our tool, we'll come down the bottom, and go right to the top. And let's see what we have as far as levels. Now, once I got the weekly set up, right, I could swing back to the daily and I could take a look at this in more detail. And you can see how it's just a little off, right? But, you know, the levels are the same. I'm going to tighten that up. I'm going to tighten that up. So now here we are. So what we didn't see, right, was this kind of half move here and this pullback, which is probably a fairly nice one. Why don't we measure that real quick? Look, guys, you can't make this up. Right, 618. I mean, right on the nose. 618. It's perfect. Strong move up, good pullback, 618, and then you ended up hitting targets up top. So if you were end up playing this, right, that target, you just missed out on the 1618, but you certainly cleared the one, no problem. All right, let's go back to what we originally saw here. This was our low. Oh, that was our low. All right, and this was our high. So if we were trading this is what we're looking at. We have a big move up and a big move down. All right, so that 618 was hit. Now, unlike this 618 on that pullback that we had over here, shot right back up. Now, not so much. All right, so now we have to look at some other things here. Where are we finding support? Support is on the 618. We've tested it once, we've tested it twice, came down close, didn't quite make it. Our next level is the 5 and the 382. This is that zone that we just spoke of. All right, so as trading is happening here, we're doing a little bit of accumulation. We're sort of just bouncing back and forth within this little zone. Now we come over here, we test the 382, and we fail. We found resistance at the 382. Come back down, we almost set the 618, but not so much. Come back up, now we're sort of blasting through the 382, but we're only just barely closing over. So this is giving you an idea of accumulation, right? The small one, you know, a handful of days. But what you're looking for is this right here. You see what happened right here. Let me get this little brush over here. This is nice, okay? So what you did was you took what was once resistance and you have now flipped it and turned it into support. So what you want to see is you want to maintain flipping. You want to flip and find resistance, flip and find resistance. Now, if you were in this trade already and you didn't know what to do, all right, so you took the trade, all right, you were hoping for this kind of pullback here, that didn't happen, you took the trade and now you're sideways. You're still in an uptrend. You got a couple choices, right? You can take the gains, right? You got gains up here, you know, now, or you take a look at the move itself and where you're actually bouncing back and forth, which is what we just did. You can say, okay, no problem. I'm in this trade here. I could take my stop loss now at the 618, which would be break even, and let this thing ride. And what you're doing at that point is you're hoping for the higher high, the higher low, the higher high, the higher low, the higher high, the higher low. You're hoping for this, right? That's your impulse move. Typical trading. So if you're looking at accumulation, you're looking at something like this, and then you're looking at breakout plays. A breakout with a close above the 382. Right? That's your next level. Above the 382, you're still in the trade. This guy comes up 236. You can move your stop up, right, to the 5 from the 618. Now you're guaranteed a profitable trade. And when you look at it, right, you'll have a profitable trade at that point, even if you get stopped out. But that's when we start getting into very specific trading styles and strategies and philosophies towards it. I mean, I can't believe I didn't show you this before, but you can also obviously measure the other way, right? So, you're looking at your high of a trend to your low of a trend, and this is what you're looking at as far as coming back up, right? So you lost all of this, let's get the this happy little hour thing. You lost all of this, and now you want to regain it, back. You want to get it back. So you simply flip your retracement tool, you know, and you go from a high to a low, high to low, high to low. So that's what we have on the screen right now. We have our high to our low, and we can see right here, right, 236, 236, 236, all resistance until bang, finally up through it. Now the 382. We weren't able to close over the 382. So now the 382 is resistance, and the 236, which was resistance this whole time, has now flipped to support. But anyway, you look at it, this is a very slow and exhausting uptrend. You can use this with confluence of other things. And for me personally, I would do something like this. And I would say, well, volume's not great. Right? So because we're sideways, it's okay. We're not exactly in trend, but this is an indication that at least people are getting a little bit tired of this. You know, the big moves aren't coming in. So you want to wait for those big moves, which again brings us back to the price action scanner. That's something I would be looking for. And I would be looking for a big move out of here in either direction, up or down, so that I can make a play on it. Fib, let's see, how to set it in trading view so it snaps. Okay, yeah, I didn't show you that. Right here. There's a magnet tool. All right, so right now, if I have this Fib tool on, nothing happens, right? I have to click it and drag it down. If I have the magnet tool on, you'll see it snap. Okay, see how it just kind of snaps? No, snap to either the wick, right? Snap to either the wick or the body. Wick or body, all right? So that's how you get it to snap in there. Now, there's two modes in magnet mode. Nobody really talks about them, but one's like super aggressive and the other one's weak. But see how far away the cursor is? And I'm still in magnet over here. Whereas when I'm not in hyper aggressive mode, I can still move around here. And if I lay the fib, I can lay the fib on here. If I get close enough, it'll snap. See how it snapped over there? And then it snapped back. All right? So very easy magnet tool. It's very cool. I turn it off. It's almost always on. I turn it off if I have the brush. All right? Because it makes drawing absolutely impossible because it tries to stick itself to every candle. And that's just, it's a horrible thing. All right. What else we got here? Let's see. Thanks. Learned a lot. Really awesome. Local fib, whole structure. Very, what do you got? When do you use the local fib versus the whole structure? Dave, I need you to clarify that a little bit. Local fib versus whole structure. So if what I think you're asking is, when do I take a step back, right? And say, well, I want to measure, you know, what do I measure now? What am I looking? Do I measure this whole thing right here? Is that what you're asking, or do I measure just this move here? Depends on what you're trading. Obviously, if you measure this whole giant move here, right? You're not scalping. I mean, that's for sure. So, you know, take a look at how different this is going to look. Something like this. You're going to be in this zone, right, from the 0 to the 236. What could be, you know, months, weeks, years, even. Who knows? So yeah, if you want the overall idea on what kind of move was made, or if you want to do back testing and see what kind of, you know, how that coin reacted, sure. If you want to get into a trade, you look for trend within that time frame. So I'm in the daily time frame now. I know we're going down, right? That's the current trend just by looking at it. You know, you don't have to be all super exact about it, but you know, obviously the trend is going down, but it looks like we might have some type of possible channel over here. So if we have something similar to this, then I could say, okay, well, just based off of this, I could trade this. I could now, like we talked about before, support and resistance, right? So now this is resistance, this is support. So now if I wanted to trade this play here, I would be measuring this move, right? So I would measure the move prior to the move that's currently happening, get an idea of what happened. I'd do something like this and say, all right, are these levels being respected? The 236 acting as support and the 5 acting as resistance, and coming back to the 382 as resistance, I would say, yes, this is being respected. Now, if I wanted to get a closer view, I should say, of what's going on in this particular move, because this would be the one I'd probably be trading, then I would go down to the low of that trend. We'll call this the trend, the low of that trend to the high of that trend. This will give me an idea of how it's going down. And if I'm finding a lot of support right here in the 618, well, this might be an opportunity to long, which if you did right here, you would have been, victorious. But like I said before about Confluence, right? Now you have previous market structure telling you that you have resistance at this zone, which is Confluence with the 382, and you're within this big channel. Then you have to ask yourself, do we have enough steam to break out? Is this a potential long that I would be looking at? And I would say, no, I don't think so. So what I would do over here, I would say, let it get over to the channel. Let me get the long from the 618 to the 382, and then let me think about maybe shorting this. And that's how I would look at that. So if I'm going to short it, I'm going to swing this back over here like this, and I'm going to do this. And I'm going to say, all right, now I have an idea of where we might be going. That's backwards, isn't it? Isn't it? You guys can tell me if I mess up. I don't mind. It's cool. So then no, I was right. So then you're looking at that move here. This is your high. This is your low. You want to have this move here, which you got. Right? You ended up taking that trade, and now you're saying, well, I want to go low to high. I'm going to go this high and this low, and now you're not really looking at your left too much. What you're doing is you're applying this short. A very specific trade because you're within a channel. All right, so this is using Confluence from other things and not, just market structure. You're looking at this channel coupled with lower volume, and you're trying to get an idea on, are we going to play this channel as resistance? But you use the fib tool to get your targets, right? So you can get your target support, possible areas of support and resistance. All right. Thank you. Can you please share the link to the video? I missed the link to the video you missed using TradingView live action, the scanner. Yeah, look, so the scanner right here, which I have to get, there we go. This is on tradingroom.io. Okay, let's see, I can put that in here, tradingroom.io. Send to all. Look at that. Boom. All right. So TradingRoom.io, that is where you find the price action scanner. That was the last webinar that we did. That is what spawned the ABCD of Fibonacci, so that you can understand going through peak gains, which is what we just talked about, and your buy fibos, which is the pullback. Now you guys are experts, right? Now you know the pullback and retracement. So, might as well, while we're here, I don't know if the time's up or not, but don't worry about it. Let's go into peak gains. Let's take a look at GRS BTC. We can see in a 3-day period, 86 up, 63 down. So let's take a look at that. GRS BTC, and then we'll get an idea of what's going on. GRS BTC, we come down, we go to Binance, boom. Now, because I love the price action scanner tool, I already saw that move, and this is exactly how my chart looks. Area of accumulation that I liked. Now it is a downtrend, okay, but I liked how it consolidated here. It's consistently getting low, but I'm going to call this an area of interest myself personally. It broke out. All right, we broke out of this zone. The price action scanner tool not alerted me, but I knew right away by looking at it, say, okay, well, you got a peak gain here. That's awesome. Let me take a look at that with a good drawback. So this was my zone right here. This was my buy zone, right? So I took the low, all right, and I took the high right here, and I said, I'm going to go just under the 618, all right, because, I took a look back at this coin. I said, you know what? It's kind of done a lot of these not so good things, where not all of these tend to play out so well. So you go back in history and say, yeah, I don't know. So what I'll do is I'm going to go light. All right. It is a breakout, and that's why I feel better about it. But I basically said if I get the trade, I get the trade, and if I don't, I don't. I'm just going to move on to the next trade anyway. No big deal. All right. So I set my targets a little low, and they got hit. So yeah, this is a trade that I'm currently in based off of the price action scanner, based off of this volume peak that came in here, and the accumulation area here. So for me, I had enough confluence to take this trade. For me, I look at this right here, which is an area of previous swing high, and we have broken that area. So that was enough for me to say, yeah, I'll take a chance on this puppy. Now, somebody was asking stop losses, right? For a trade like this, because I was already a little hesitant to go into it, I went with a previous high, which is just this little guy right here. All right, so nothing crazy, but I took this candle as an area of interest. Now, if you want to get out of that trade quickly and you don't want to lose X amount of capital, then you set your targets at the 786, and if it goes any lower, you're out. All right, you don't have to worry about that trade no more. You're done. Rock and roll. All right. I think that wraps it up. Go ahead, throw in the chat. You're good. Is everybody clear? Thank you. Looks like pump and dump. Yeah. Well, we went over that in the previous webinar, what to look for pump and dumps. And this is a perfect example. Pump dump, pump dump, pump dump. All these huge pump dumps, and then you can come back and take a look at the tool, right? And I do this market cap 14 million, right? Not much at all, but trading big. Right? So far, there's a lot of interest, right? 2,900 Bitcoins. So volume's fantastic. Really good volume. All right. Good. Great work. Thanks very much. Thank you. Great information. Awesome webinar. Thank you. You guys are awesome. Look, I cannot thank you enough, especially you people over there at 3 o'clock in the morning or whatever time it is. Thank you for hanging out with me. Thank you for being here. Thank you for learning. I really do hope you took something out of this. You got some kind of value out of it where you can use this and apply this in your trading. And, until next time, awesome. All right. We'll sign this one out. Yeah, that's it. All right. Thank you.